Alrighty, folks, this man has been missing in action. He's going to do us a favor and let us know about where he's been, what's he been doing. We're going to talk about CPI. We're going to talk about comparing 2025 with 2022. That's going to be an ugly comparison, I'm guessing. Also, 2025 and 2018, aka Trade War 1.0. We'll also talk about deflation. Is deflation a real possibility in the short term? Is it a long-term concern? We're going to talk about this and more with the one and only Mr. Dan Bird. How you doing, sir?
Doing well. How are you?
I missed you, man. We hadn't talked for like 3 freaking weeks. That's
I
it's
know
probably
it's good
been
to it's
five
good to be.
years.
I know, right? It's good to be home. That is the
Yeah,
longest, I think, in 5 years. Yeah,
yeah, it has, it has.
yeah.
And
It's
we
good to
were
be
both
home. Every day on the road. I know what circus clowns feel like now.
just traveling city to city.
Right.
Um, well, we got a lot to talk about. We'll certainly get into the economic data, but we're also human beings. So why don't you kind of share with us, what you did?
All right. Sure. It won't take long, but let me
Yeah.
share my screen. For those that are following along on my YouTube channel, I wasn't able to post every day, but I tried to post, every couple of days or so,
Sure.
and I would put the maps up we were actually going along. So what you're going to see is the completed trip,
Sure.
everything finished. That's what it
And
looks
this was
like.
in a car. You're doing
This
this
was
in a
in a
car.
car. Yeah,
Oh my God.
this was in a car. So started down here in Naples.
Now, you have to tell me why, because that looks like a lot of driving.
Why? Yeah, good question. Why? There's the miles, 4,200.
How many days?
17 days.
So that's like 250 miles a day.
I didn't figure it out that way, but I'm
Sure.
sorry that you did. Uh, Sounds a lot worse that way. But it started off with Janet, my wife, had an aunt who died, and they were having a celebration of life up here near
Okay.
Cleveland, Twinsburg.
Okay.
So we were debating, should we fly up for it and then fly back? And we're like, well, there's some people along the route that we haven't seen in a while, so let's just do a road trip.
Okay.
So we did. So we left there, went to Valdosta, Georgia was the first stop. That was just a hotel. Then a friend of mine that lives on Lake Lanier, right here, was the next stop. And then we went to see my cousin outside of Cincinnati up here.
Mm-hmm.
And then the celebration of life. And then we went to my old neighborhood, Lake Linganore,
Yep.
the house that I used to live in right on the lake. Some neighbors of ours that are still really good friends. We stayed with them. So that was a lake house. So my friend here in Lake Linganore was a lake house. This was a lake house. And then we left there and went to see my brother in Roanoke, and then went down here to Chapin, which is Lake Murray, another lake house. Friend of mine there, and then we went back to my friend here in Lake Lanier. So as I was posting this, one of the subscribers said, "I think we now know what kind of friends Dan has, or
Yeah,
people with like
exactly what I'm thinking. That's got some really rich friends.
everyone has a lake house."
There you
So then
go.
we left there and went to Destin just for an overnight. Right, it's a little beach town, pretty cool little beach town. And then New Orleans, where my brother, who lives in Phoenix, was there. We were stayed there for 3 days and explored the city,
Nice.
and then came back to Tallahassee overnight, and then back home. So that was the whole thing, 4,200 miles.
What was your favorite, I don't know, stop? And then what was the one negative surprise that may have popped up somewhere along the way?
Well, I would probably say the favorite stop was New Orleans because we hadn't been there.
Okay,
We'd been to most of these other places.
got it.
Um, that's probably the favorite. The negative, I'm not sure there was any negatives other than my car got filthy, so I had to take it
Ah,
to car washes a couple of times.
no, yeah. Okay.
But it did really well. The car did great through the whole trip.
Now,
Um,
was it just you two, or I forget, do you have pets or just you two?
no, not anymore. My
Okay.
my dog died 3 years ago, unfortunately.
Yeah.
But yeah, just the two of us. I had
Okay.
a rack across the back where we could hang clothes in the back. Another reason a road trip is
Yeah,
easier.
makes
We
sense.
take
Yeah,
lots of stuff with us.
there you go.
So that was it.
Well,
So I tried posting on my YouTube as we were traveling, and
nice.
it was fun.
Nice. Well, again, it
But
must be
probably
nice.
one and done. We probably will never do it again.
Yeah, check that box. Done. There
Right.
we go. Well, that's fun. Again, being friends with Dan means you get a lake house. I think that's just something that comes with being Dan's
Or
friend.
the other way around. You have a lake house and then I become your friend.
Yeah, either way you want to look at that. But let's get into the topic at hand. We've got CPI coming up. We've got looming threats of inflation or deflation. We've got a stock market that basically is back to where it was, which actually I give you a shout out again. 3 weeks ago, you were looking at some metrics, and I remember you explicitly saying there's like one green shoot that really means the market might go up from here. You nailed it.
Right.
So thank you for that. Getting another one right, young man.
Yeah, we'll see where we go from now. I'm going to
Yeah,
look at the
that's a big question.
Yeah, I'm going to look at the compare. I've heard some things from a variety of sources saying that that's it. We're probably not going much higher and
Yeah.
going back down to the lows again. We'll talk about that in a minute, but I want to show the comparisons with 22 and 2018.
All right.
First, so here's 2022 versus 25. I'd said last year in the fall sometime that 25 might look similar to 22.
You did?
Well before we were still going up, making new highs at that time.
Mhm. Yeah.
So here's 22, the purple or the pink, whatever, and 25 is the red.
Mhm.
25 is about 5 or 6 weeks behind 22. So
Oh,
22 started
interesting.
going down right in January and 25 was in February.
Okay. So there's
It's
a
a little
time lag.
behind. So,
Yep.
so here's the 12% rally right here. So we're a little behind that. 12% is this line right here.
I got
So
you.
clearly we've blown through that. We actually got up to 18%,
Mhm.
which was almost equal to the biggest rally of 22, which was 19% way back here in June
Got it.
to August. And everyone thought that June was the bottom. And then um, Powell came out and said, there's more pain ahead.
I remember.
Jackson Hole speech in August, right there.
Yeah. Pain is coming is basically what he said in 5 minutes.
Right. So at any rate, everything was actually tracking pretty closely with 22 until we got here.
Okay.
Until we got this rally and we rallied through that 12% level and rallied now up to 18%. So it's beginning to look less like 22
Okay.
and maybe more like 2018.
Okay. Let's take a look.
Or it might just look like 2025. Who knows?
Who knows?
So here's 2018, which was the last trade war.
Right.
So in 3 months, we went down 20%. Over here in 2 months, we went down 21%.
Hmm.
And then we started coming back. We came up and then we made a higher low right here.
Right. Yep.
And there's the higher low this time right here.
Yep. Hmm.
And then we continued higher. Right now, we're in this little consolidation period right over here in 2018.
Okay.
That's roughly the same time period right here.
Sure.
So if it is similar to 2018, then this consolidation should break out to the upside,
Hmm.
and we go back to the highs again.
Yeah, it's interesting. I've done a lot of thinking about this recently. And I actually postulated or put out there about a week ago that I thought not last week, but the week before might have been max uncertainty.
Mm-hmm.
And what we have seen since then is it's not like it's clear as day now, but we're
Right.
no longer as uncertain. We have had a trade win. We have,
Yes.
Powell's not getting fired, right? We're starting to remove some of the India, Pakistan appear to be, a peace treaty. It seems like maximum uncertainty might have been 2 weeks behind us. And
Right.
if that holds, and if that's true, we've got months of good news ahead of us.
Well, I'm not sure we have months of good news, but
Well, on the
we'll talk
certainty
about.
front, yeah. On the
Well, the
certainty,
uncertainty, yes, the uncertainty has gone away, which basically mirrors 2018.
that's exactly where I was going. Yeah, every day it gets a little clearer. Yeah.
Right. And the same thing happened in 2018. We had a trade war when Trump was in office,
Yep.
mostly with China. It wasn't the whole
Yeah.
world at that
Just
time.
China. Yeah.
Um, and lots of uncertainty. The market went down big time, and then the uncertainty started to wane, and then some agreements were struck, and things started to look better, and we went back up to new
Yep.
highs. And that's very similar to what's happening right now.
Okay.
The
All right.
the biggest difference that might throw a little wrench into this is all of this back then happened at the end of 2018.
Mhm.
That whole trade war thing was at the end of 2018, which normally is a very bullish period,
Hmm.
but that turned it into a bearish period,
Well, the
right?
other thing that happened, I might be wrong, but I believe Jerome Powell cut in the end of 18.
That's a good point. Good question. I can look at that. We'll look at that in a minute.
Yeah, I do think
Um,
because Jerome Powell was not going to, and then he did have a cut, which people, say he bent the knee to Trump. I don't think he's going to bend the knee this time.
Not because of Trump. He may cut for other reasons, but
Oh
not
yeah,
because.
yeah, we've got to be careful what we wish for. I mean, I was talking. There's a lot of Fed people speaking this week because they were in a quiet period last week. A couple of things I noted. Um, let's see if I can get this right. Uh, so Fed President Hammack says firms are raising prices ahead of tariffs. We had, I think it was Fed President Cook says that the next rate move might be up, not down. That'll shock people. Um, so again, there's a lot of uncertainty coming.
So why would that be? Why
So
would the next why would the next
so
rate move be up?
so Fed President Cook says if we lose productivity, if the economy is not as productive, if we lose that, the next rate move will be up, not down, to fight inflation. Productivity is one of the things that makes inflation better.
Right.
Specifically here's his quote. You can look it up. I found it on X. Less productive economy could require higher interest rates to control inflation. He said that on Saturday.
Yeah, that's very interesting as we go into the
The next 3 months.
next 3 months, right?
I
Which
wore my yeah.
we'll look at that in a minute. So the next couple of things I want to show is this is from Stock Traders Almanac. This is what May typically
Mhm.
looks like going back, post-election years back to 1950 and all years back to 2004, 21 years. And this is where we are right now. And here's the CPI report that comes out on Tuesday, and then options expiration on Friday.
Okay.
So you can see Tuesday is the low. CPI report comes out,
Hmm.
and then the market takes off. This is historically.
Right.
Now, the CPI report is not always on this date, so that's just a coincidence,
Right.
right? However,
Okay.
it's interesting.
Yeah.
So for post-election, which are the dashed
Yeah.
lines right here, we go up. For all years, we go sideways
Hmm.
until the end of May.
Okay.
And May typically is a pretty good month.
Yeah. Isn't
This
there
is
a saying that says something like "sell in May and go away" or some stock?
yeah, they do say that, but what they mean is sell at the very end of May and go
Right.
away,
Right. 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 Okay.
not at the beginning of May and go away.
Right. I'd heard it. Didn't know what it meant.
We'll look at that in a minute also. So
Okay.
this is the full year comparing post-election years, which is what we're in. They do different ways of comparisons. Fifth year of a presidency, which they're calling this one for
Yeah.
Trump.
Makes sense.
All Republican administrations actually is the lowest line, the green one.
Hmm.
Incumbent party loses, the red line, and the Stock Traders Almanac aggregate is the blue line up here. And then
Yeah.
here's where we are.
Hmm.
So keeping in mind that whenever you show an average like this going back to 1949, and then you show a single year next to it, there will by definition be outliers,
Oh, of course. Yeah.
right? So this gold line is just a single year versus 75 years for the other lines.
Yeah.
All right.
Yeah.
So to get to an average means it has to come back up at least to the middle part of this.
Okay.
Right. All right. So that's for a full year. This is for May. You see where we are. We're already exceeding what May typically does in post-election years. They're saying consolidation until mid-month and then a rally into the end of the month.
Hmm.
So
Okay.
that's what May looks like, and I think that could happen. Now let's take a look at a few things. This is my website for those that are interested: breakpointtrading.net. Don't forget the net. My YouTube channel link is right there in the upper right, and the newsletter, free newsletter, is right there in this little box right here. First thing that you might notice is the market bias chart, which has
Yeah,
been,
that came off the bottom.
yeah, it has been extremely accurate, interestingly. This is something that I created, I made up,
Hmm.
and it's really been very accurate telling what the market's doing. And it went up again on Friday, and it will probably continue going up into next week. So that's very positive. As we go into the end of May, remember the rest of May is usually bullish. So that's reflecting that. If we look at the S&P, we'll see that it has just come right off the bottom, going straight up.
Wow,
This is
that's
a
a rocket
box.
ship. Yeah.
Yeah, it's like a rocket ship. It's almost too steep, actually. So it needs to consolidate, needs to take a rest.
Mm,
Markets don't go like that forever.
right.
And this box that I drew right here is potentially a Darvis box,
Mm,
which I'm going to cover on Tuesday, my Technical Tuesday on my YouTube channel. I'm going to talk about Darvis boxes and how
yep.
Darvis created it, and what they mean, and whether we might be in one right now. And if we are, it means we're going to bounce up and down sideways for a little while.
Hmm. Yeah, chop. Yeah.
Usually it will exit to the top of the box, but it doesn't have to. It could go through the bottom as well.
Okay. All
All
right.
right, so everything looks pretty good. The 21 is about ready to cross the 50 right here.
Mhm.
That will give a medium-term up signal, which is what will make that bias chart continue to go higher.
Right.
This looks similar on most of the charts, actually. If we look at the NASDAQ 100, you'll see it's actually already crossed on the NASDAQ.
Well, I'm
So
actually
that'll,
curious about Bitcoin. I mean, have you seen Bitcoin go 104 or something crazy?
yeah. So in my YouTube channel way back here, I was talking actually way back here. I was talking about this inverted head and shoulders.
Oh,
You see the left shoulder, the head, the right shoulder.
yep.
And I drew the resistance neckline right there. And this was way back when we were still consolidating sideways right through here.
Hmm.
And I said, if it breaks through that neckline, especially if it does it with power and volume,
Yep.
then the target for this inverted head and shoulders is 100K,
There
which
you
is where
go.
this right there.
I love the fact that you have a channel now because you get to do this daily as opposed to you and I only talking on Sundays. The
Right.
fact that you have receipts and people can go back and validate what you just said is
Yep.
awesome. Nice one.
Yeah. Yeah. It's all on there. And people, the thing that I like about it is that folks have an opportunity to leave comments and ask me to
Hmm.
look at something else, or look at the stock, or what do you think
Yeah.
about this, and then I'll
So cool.
incorporate that into other shows that I
Yep.
do.
I'm just so happy you have a channel. So awesome.
Right. So that's pretty good. But it's continuing. It's up to 104 now. So it's
Yeah.
continuing higher. It's got a serious resistance level at 106 right back
Okay.
over here. These
Yeah.
two areas here where all these people want to just get out of break even,
Sure.
right? 106. So that's the next test. If it
Okay.
breaks out, if it breaks out with volume above 106, then it's going much higher. Can't tell you
Got it.
where it's going to go, but it's going to go much higher than 106.
Got it.
The
Okay.
interesting thing about that, and Bitcoin may play into the conversation we're going to have in a minute about what happens after May,
Mm.
is that, and I showed this before here with you, that Bitcoin is highly correlated to the NASDAQ 100.
Okay.
So as one moves, the other moves.
Yeah, it's interesting. I'm gonna guess that's breaking down.
It might be breaking down. We can actually try it. Let's see if I put the NASDAQ 100 right on the chart. Behind price. Let me make it a different color so it appears better. Let's make it pink. All right, so there's the NASDAQ 100
Mm.
behind Bitcoin.
Yeah, maybe it's not not as breaking down as I thought.
Well, if it is correlated, what this implies is that Bitcoin has just taken off, which means the Nasdaq 100 should take off,
Right.
right? So it's lagging a little bit behind Bitcoin.
Hmm. Okay.
And if that doesn't happen, then yes, it will be breaking down.
Yeah.
But
Yeah,
I don't think
I
the
think,
evidence,
yeah, not there. No
evidence
evidence yet.
not there yet,
Okay.
but we shall see. But that's a good observation. All right. So the next thing I want to show is seasonality. And I did a technical Tuesday a couple of weeks ago, the Tuesday just before I left, so it might be 3 weeks ago now. I'm going to do seasonality for the S&P. And we'll go back 12 years. And we'll go back one more year because we're in April and the other months haven't completed yet. So it's not a good comparison.
Right.
So this is the S&P. Look at May.
Does that mean it's up
May,
92% of the time?
92% of the time, it is higher.
Hmm.
It closed higher than it opened. That's what it
Got
means.
Got it.
Now, in May, it was up 1.1%. In July, it's up 3.1%. And in November, it's up 3.9%. So of these three best performers, May is the weakest, but it is better than all the other months.
Got it.
All right.
Okay.
Now look at June. June at 75 and September at 42. June, August, and September are, June is a pretty weak month, but August and September are the weakest.
Got it.
So what this means is we could get a downtrend. We could get an uptrend to the end of May, a downtrend in June. We might get a little bounce in July, and then we've got August, September, and the first part of October to get through.
Got it. Okay.
Okay.
Yep.
So keeping that in mind, when we look at CPI,
I see what you're doing.
coming up next week.
I see.
So keep the seasonality in mind.
Yeah.
When we look at this.
I like how you did that.
Yeah. So here's CPI. We got a big one dropping off next week, which is going to make it look like it's going down. Now the forecast is for 2.3. I think it's going to be lower than that.
Yeah, I mean it really could be 2.2 or something. Yeah.
Yeah,
really
it could be 2.1.
Oh my goodness.
And even if it's 2.3, we're going to get a 1 month rate of change that is deflationary.
Correct.
Even though the 12-month won't be, but the 1 month will be. Right?
Yeah.
So
really
we went in 2 months, we went from 3 to 2.4.
Okay.
Right. So February was 3, March was 2.8, and April was 2.4.
Yeah, and then to your point, the 3 months that you and I have been warning people since January, we've been warning people for 5 months that these next 3 months are going to suck on the inflation front.
Exactly. And look where they come: June, July, and August. And what did I just show you for seasonality?
Yeah, exactly.
All right. So take both of those things combined, and we could have a very difficult summer to get through.
So that's pretty interesting because, again, I see what you did there by tying that seasonality. You're basically saying May is going to feel like we have our wind at our back. Inflation is going to be less of a headline. But then we get to the next 3 months, i.e., the summer, and inflation is going to be front and center because we won't be 2.3 and the next month or whatnot. It's
right. Exactly.
Oh,
so inflation will look like it's coming back again. That Fed quote that you just had. I mean, it will look like, yeah, he's probably right. Maybe they do need to raise.
Yeah,
now,
exactly.
I think
you're going to get, just to be clear, you're going to get that 3 months in a row. So let's just say for shits and giggles, it comes into Tuesday at 2.2. People are going to be talking about the Fed's declaring victory. The Fed should cut. The Fed is always late. This is what the talk track will be as soon as Tuesday. Then you fast forward 4 weeks and it goes from 2.2 to 2.4. Then you fast forward another 4 weeks, and it goes from 2.4 to 2.6. And then
Right.
you fast forward another 4 weeks, and it's 2.8. Now
Right.
they're
And so
talking about the Fed's
we
got to
basically
raise.
have given up all of
Yeah, we
this
just
game.
round trip it. We just round
Yeah,
trip it.
that's right. And the Fed knows that. I mean, that's why they didn't cut last week,
Yeah, correct.
because they know what's coming. They know this is coming. They don't want to cut and then have to raise again.
Yeah,
They're
they've
already
always said,
setting they're already setting the stage that maybe they have to raise again,
yep,
right?
yeah.
Um, and however, well, two other things I want to show you. So there's the base effect. All right, that's what we always look at before CPI. The other thing we always look at is commodities.
Oh,
Have you
yeah.
looked at commodities lately?
No, I haven't because I know I talked to you, and I know you do it. I haven't looked. Ooh,
There, this highlighted area is what will be reported on next week. And I drew the lines in there to show you the trends.
yeah,
So DBC is basically all commodities,
yeah.
DBC. This is an ETF, by the way. So if people out there wanted to trade it, they could actually trade commodities just using the ETF.
So this is
The
another reason why you open with it might be lower, it might be 2.2 or lower. This is another reason.
that is correct. That's why
Got
I
it.
said it could be 2-1.
Oh man, can you imagine?
You take the base effect,
Yep,
and then you
and this.
add on top of that commodities. I think
I'm
it's
gonna,
going to be I think
yeah.
it's going to be lower than the 2-3 forecasted for sure.
I can already hear President Trump screaming, "Too late, pal. Need to cut." I can already hear the Truth Social post
Right.
coming.
Yeah,
Okay,
all of that's going to come right back up again, and then we're going to get slammed in June and July.
3 months, June, July, and August.
Yeah, will get a little bit better, but June and July will be the worst.
Oy.
So
Okay,
this is all commodities up here. It's dropping off a cliff. Copper dropping off a cliff. Copper, by the way, is a reflection of potential recession.
absolutely. Dr. Copper, they call him. Absolutely.
Yeah, CRB, which are these over here, agriculture, energy, and metals, dropping off a cliff. Oil dropping off a cliff. Gasoline
Yeah.
went down as well. So all of this combined, I am going to call 2-1.
Wow, 2.1.
Yeah, 2-1.
All righty, folks. Let us know in the comments. What do you think? 2.1. Are you going to take the over or the under? I'll take the over. That's a big move.
Yeah.
It's possible though. You get a
Uh,
deflationary print month on month, you absolutely could get your 2.1.
well, look at the move that happened last month. Just last month,
Yeah, yeah.
we
No, it
went from
did.
2.8 to 2.4. 2.8 to 2.4 because we had this big move in the base
Yeah,
effect,
you're right.
right?
You're right.
However, look at commodities. What happened last month? Commodities were going up last
Yeah.
month, and we still
Okay.
had that big move.
I love bold calls. I love it. 2.1. I like
I'm
it.
calling 2-1.
We will revisit that next Sunday.
All right, and then the reflation begins,
Mhm.
and people are going to be talking about stagflation. So those are
Oh,
those will be the topics: stagflation, inflation happening again,
Arthur
Trump
Burns. Yeah, you're gonna hear
Trump
Arthur Burns. Oh,
Trump versus Powell. We're going to hear that
yes.
all summer for 3 months.
Do you think
We're
the
going to
Fed
be
do you think the Fed's gonna have to raise next? Do you think it gets that bad? You do you think the
so
next move is up or down?
well. So let's talk about that. So the Fed did not cut
Mhm.
last month, or last week, I should say.
Mhm.
The Fed did not cut because they know this is coming,
Yeah, of course.
right? But look what happens after those 3 months.
Yeah.
We'll be right back. Look at this one over here. That's a huge one. We're
No,
going to
no,
be right. We're going to be right back down again, and the Fed knows that too. So they're going to get such huge flack just for doing nothing.
so let me ask you a question. December 31st, 2025.
Right.
Does the Fed do nothing between today and the end of the year? Do they raise or do they cut in 2025?
Yeah, that's a really good question. So here's the other wild card. We'll look at the claims number. Unemployment came in pretty flat.
Right.
It was basically the same, 4.2, the
Yeah,
last jobs report. The next jobs report is on, I think, June 7th.
I think
It's a
so. Yeah.
Friday.
Yep.
Um, you can see right here, it's starting to tick up.
Yeah, we had that 1 week, 2 weeks ago that went up to 242.
Right now, the next week next week it was still up, but it's green because it was lower than the previous
Yeah, it
week.
was 225. Yeah.
Right, but it was still higher. And I think this is going to continue for the until that June 7th. June 7th, I think it's going to start to tick higher. This could
Okay.
go up to
So
4.3.
so unemployment goes up. Makes sense.
So unemployment goes up. So what does the Fed do when unemployment goes up?
It depends on the rate of speed.
Well, that's true. Yeah. I mean, he's
Yeah.
already said 4.4 as his target for the year. So if it goes to 4.3, probably nothing.
Yeah. Nothing.
But if unemployment keeps continuing to go higher, then the he needs to cut. If inflation goes higher, he needs to raise. So I think he does nothing.
Yeah. So nothing in 2025. My call
Well,
from
let
nine
me
months
take
ago
that.
was right.
Yeah, let me
Okay.
take that back.
Oh, come on.
I think he may cut near closer to the end of the year,
So November, December.
mostly because of this right here.
So let me play this out. Yeah. Well, again, we could just round trip this thing a couple of times. We're gonna go to your call 2-1. We could be back at 2-8 by the
Yeah,
August print.
right,
And then heading into the end of the year, we go back to 2%.
right. Yes.
So
And
if
that
that's
and
the
then
case, then no cut all
yeah.
year.
And then by the end of the year, and by the way, I think the unemployment rate is going to continue to go higher at the same
Yeah.
time.
Yeah, for me, the number is 5.1. I mean, to me, the number is 5.1 on the unemployment rate. That's another
Right.
million and million two, I think, unemployed. That's when they
Yep.
give up and they cut.
Right. Um, by the way, you said that the Fed cut rates in 2018.
I think they did.
2018 is right here. So
Maybe, no,
yeah,
maybe
this is
not.
what no, they didn't.
No, it
Not
was
in 2018.
2019. So they
They
cut in
waited
19.
till yeah, it was in the summer of 2019.
Got it. Okay, I was wrong.
Yeah, right there.
Okay.
So it's going to be interesting because it's going to be interesting to see what Powell does because everyone's going to be pushing against him from both sides.
Oh, I would. I mean, as soon as Tuesday, they are going to be screaming from the hills, cut, 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 cut. He
Right,
knows what the next 3 months are, and it's a mirage that we're at 2-1
right,
because it's going to go right back to 2.6 to 2.8
right,
over 3 months. So yeah,
right.
it's going to be wild.
Yeah. So now what does that do with the market?
Well, that's back to your seasonality. That makes May look pretty good, and then June comes on and smacks them.
Right. So June is down. Well, let's look at this on the NASDAQ. And let me go let me go back 12 years like I did on the other one and move it back 1 year right
Okay.
there. So you can see May is third best month of the year, and then June is down here. So June is weak, and then July actually usually is a strong month. But then August and September, so the summertime is going to be really ugly for the market. I think July, this historical period is not an anomaly, but I think this year will be an anomaly. I don't
Correct.
think it's going to be that strong in July. I
No.
think June, July, August, right into September. September is, you can see right there, is the weakest month of the whole year.
Right.
I think we're going to have probably a down market through that period. And then at the end of the year, we'll come roaring back again.
Well, let's ask the question I'm sure everybody is out there wondering. What's Dan Bird doing with your personal portfolio? Are you invested in the market because you're trying to capture May? Are you in cash? How deployed are you on a percentage basis, roughly?
So I was basically in cash while I was on my trip.
Makes sense. Yeah,
So
don't have time.
I couldn't really watch anything. But I did start to move some money into long positions.
Okay.
um, options
Okay.
in particular. And I'm going to probably stick with options for the next couple of weeks
Okay.
because I don't want to get into something for a long-term investment until we
Makes
see how
sense.
the summertime plays out.
Okay.
But I
So
will do
again,
short-term, but I will do short-term options
yeah.
plays in a variety of ways.
Yeah. Sounds good. So again, this is a time where you, the trader, will
Right.
be active, but not you, the investor. And I'm using that as a differentiator of timing.
Yes, that's right. And when we say investor, I'm a swing trader, so that means, a couple of months, 6 months,
Mhm.
something like that, where I'll, buy a stock and hold it for that period. For those that are long-term investors, there's nothing you should do. Just, hang in there.
Yeah. Yeah. Long term is long term. Well,
And
very good.
and for those that are out there saying that we're at the end of the world and we've got a 1929 crash about to happen, and I mean, there's no evidence of that at this point. I have shown on this channel multiple times. I went back and compared 2008 and 2001, and and the COVID crash, and in every one of them, the market has given us indications well in advance
Right.
before that big crash happened of when to get out. So the market knows better than the prognosticators on the internet,
Yeah. No
including me,
question.
including me. And
Oh,
people love to say, "Oh, there's this hidden metric that nobody's
mhm.
paying any attention to, and this hidden metric that's going to cause everything to crash." Well, to the market, there is no hidden metric. The
Right.
market knows, they know all of this already. It's already built in.
Yep.
So, yeah, big traders, Wall Street can do things that the little guys can't do, and they're going to do it ahead of the little guy.
Right.
But but they're but they leave footprints when they do that,
Right.
and I've shown that here before, like growth versus value is one. You can see right here. This is large cap, small cap, mid cap, growth versus value. If this is going up, that means growth is outperforming. If it's
Mhm.
going down, that means value is outperforming. And that means Wall Street is rotating out of growth and into value
Yeah.
whenever you see these lines change.
I love I love the analogy that the big funds leave footprints. I think that was very well said.
Right. Absolutely. And right now they are moving back into growth. So we don't know how long that will last, but right now they're moving back into growth, and they will they will give us clues before that big crash comes. The other
Yeah.
thing that I created is a liquidity, and this is
Mm.
based on John Carter, a video that he did, which I posted on my Technical Tuesdays. If anybody wants to watch it, it's very interesting. We talked about this last time we met, actually,
Yep. Yep.
about cycles, real estate cycles, and stock cycles, and that type of thing. But he said if there is liquidity in the system, then the stock market is not going to crash.
Mm.
If liquidity starts to be taken out of the system, then stocks become very vulnerable.
Mm.
And the things that he pointed to for liquidity, and I know there's some charts out there, and there isn't one on stock charts, so I can't really create one just for liquidity. But there are others out there that I've seen on the internet that try to consolidate all the liquidity things. But for him, the key ones are the US dollar, the 10-year yield, oil, and commodities,
Yeah.
these top four. And if they are moving down, then there is plenty of liquidity in the system.
Got it. Okay.
So for the US dollar, other countries are denominated in the reserve currency, the US dollar. So when they have to refinance their debt, they want to do it with cheaper dollars.
Hmm.
So if the dollar is going down, that's a good thing. That means
Got it.
there's more liquidity in the world. When oil is going down, I mean, that's a pretty obvious one. Oil is going down, that means other countries have more money to spend. There's more
Hmm.
liquidity. Same with commodities. So as long as there's liquidity in the world, then the market's not going to crash.
Like it.
And here's the market. This is the total market index down here, VTI. And the other thing that he said is once these things start to move down, it's about a 10 to 12 week lag time before the market itself starts to
Mm.
respond, move
Makes
higher.
sense.
So that's what these lines here are. This is the 2022 period, 10
Got
to
it.
12-week lag time, and the market already now is responding.
Love it. Very cool. Well, Dan, you do an amazing job on daily updates on your YouTube channel. You come here once a week. What is the YouTube channel one more time?
It is right here on breakpointtrading.net. Just go to that website, and the upper right is the YouTube channel. Just click on that little box, and it will take you straight to it. And my newsletter is in the box below.
Very cool. Well, we are so happy to have you back. The audience missed you. I missed you. We'll talk next week.
Sounds good. Have a good weekend.
You too.